Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
Hey, thanks for having me on, Jim.
Ross, a listener mentioned that your firm has offered a reward to anyone who can prove house prices change in a month. The listener asked, why have none of Canada's 140,000 realtors claimed this $10,000 reward?
Someone must be following my Twitter account.
Who doesn't?
Yeah. Well, it's funny, you know, we, back in, I think it was 2010, Jim, the Canadian Real Estate Association was starting a new campaign, to launch a new technology with a system that, we disagreed with. Now, we disagree with it because we know how that they skew things to convince the public. And one of the things that we knew, was coming was the benchmark price. And what the public doesn't know is that the benchmark price was created as a result of the Ontario housing market in the 1990s, when the average selling price was the sole product available to measure house price change, which they called measuring house price change. The result of that was that it was a long time coming. I think it must have been at least 10 years that they were on and off fighting to have a house price index. End up coming up with the benchmark because most experienced realtors, the guys and girls who were selling 50 plus houses a year, they knew what the scam that the Canadian Real Estate Association was trying to pull, and we just didn't want to have anything to do with it, which is the benchmark price. So around 2010, I got into an argument with the Canadian Real Estate Association. They sent a couple letters. Their legal staff sent a couple of letters, whose names I keep seeing coming up, by the way. Their legal staff now have moved on to other organized real estate associations. But anyways, we came up with, a reward that was $1,000, and it was for anybody who could prove house prices change in 30 days. We would give them $1,000, and we put that out there to the greater real estate community, or certainly the community that we at least communicated with. Nobody could claim it. Nobody could prove that house prices change in 30 days. Now, of course, we knew we had zero risk of paying this reward because they can't prove it. They cannot prove it. So we bumped the reward in 2015 to $10,000. $10,000. Still remains unclaimed. So any of you listeners out there who can prove house prices change in 30 days, the value of a home changes in 30 days, if you can prove it, in other words, you can supply us the data that we in turn cannot debunk using standard house price methods, things that have been used for decades, we'll pay you $10,000. This is not any realtor in Canada, any realtor that you hear pontificating anywhere, any housing analyst anywhere, anyone who has that they're selling products to people about housing market intelligence, anybody. We have $10,000 sitting here waiting to be claimed. All you have to do is prove house prices change in 30 days. Guess what? I know you can't prove it because it doesn't happen. What this listener is actually saying is the difference between a real estate brokerage and a stockbroker. A stockbroker can prove the value of a stock has changed over a year. Organized real estate with houses, you cannot prove it. You cannot prove it. With a stock, you can. With a stock, you can prove the price changed in a month. With real estate, you cannot prove it. With a stock, you can prove prices changed in a week, a day, an hour. That sometimes you can prove in a few seconds the price of a stock changed. It's recorded. It's black and white. The data is there for everyone to read. It is irrefutable. That's the difference between a stockbroker and a real estate broker. A stockbroker has the data in front of you that is irrefutable. You can buy this stock for 2% more than what you could buy it for a minute ago. The stock price has gone up. You cannot do that with housing. There is nowhere, Jim, nowhere in North America from 1978 till today, any city in North America with a population over 50,000 where you can prove house prices change in 30 days. You cannot prove it, yet everybody believes it. I will argue you can't prove house prices change in 90 days, and I will guarantee that you can't prove it because they don't. House prices do not change. If they change, there is $10,000 sitting here waiting to be collected. All of the listeners on this show, everybody that we consult with, every economist in Canada, Evan Siddell from CMHC, Bob Dugan from CMHC, Bill Morneau, Minister of Finance, Tom Davida from the University of British Columbia, Andy Yang from the University of Simon Fraser, what's Andrew's last name from the University of Queens? Oh my gosh, I can't remember. All these guys. Hey, there's $10,000 sitting here, and all you have to do is prove house prices change in 30 days. You can pick any city in North America, any city you want, and all you have to do is prove the price of a house changes 1 penny in 30 days. You can't prove it. They can't do it, which is why the reward is still sitting here. I will tell you, we could extend it to 90 days. Give them 90 days. The price of a home does not change in 90 days. Prove it. Prove that they do. Supply us with the information that will survive a simple scientific test. That's all. Supply us with the information. Now, all the people out there that are on CERB, that are realtors, there's probably around 80,000 of them right now. There's $10,000 waiting here for you to collect. And all you have to do is prove house prices change in 30 days. You can prove they go down or you can prove they go up. We don't care. You've got to prove that they change in 30 days. You have to supply the exact same proof a stockbroker uses. Guess what? They can't do it. So that's why we can make a reward like this, because we know we're never going to have to pay it. Nobody can do it because house prices really don't change. The world is not flat, folks. If you sail your boat out to the edge of the horizon, you're not going to fall off. You're just going to circle around back till you get back to where you started, sooner or later, assuming you can navigate the Panama Canal and you're at the right angle. No, this guy is talking about something I talked about last week in the Twitter feed before I went off Twitter. The Roth K account now is just used for the firm. I mean, I see what's going on, but I mean, I'm not using it for personal reasons any longer. There are 140,000 realtors in Canada today. Since we first launched this in 2010, there has been over 230,000 realtors. 230,000 different Canadians have had their real estate license in that period of time. Okay? Any of them could have walked in, I'm assuming with a simple spreadsheet, and proved to us that house prices changed in 30 days. It's never collected. Now think about that for your listeners. Everyone you're hearing giving advice about housing market, the economy, everything else, all these people who are claiming they have the special thought, the special answer, they're measuring things differently than everybody else. There is $10,000 waiting here for them, and all they have to do is prove house prices change in 30 days. Even right now, when everybody thinks house prices are declining, okay, prove it. Prove house prices have dropped from March till April. Forget it. From February till the end of April. In Toronto, there were houses selling at 20% over the asking price. Prove that that house has dropped 20% in value over the last 2 months. You can't prove it. I hope listeners understand how crazy this is from our perspective. There is not an economist in North America. There is not a PhD economist in North America. There is not a realtor in North America. There is not a real estate broker in North America. There is not a chief economist at a real estate board in North America. In Canada, there is not a provincial chief economist who could collect this money. They can collect this money simply by showing how house prices supposedly change in 30 days. They don't. It's a scam. It's a con. It was innocent in the 1980s and 1990s until Greg Klump, the chief economist at the Canadian Real Estate Association, decided to use it as a weapon against the Canadian homebuyer. And at that moment in time, it became something different. It became a tool to convince a nation or a globe that house prices change in 30 days. You have major corporations with multi-billion-dollar IPOs right now that have been launched in the States in the last 2 years that are predicated on a false belief that house prices change in 30 days, when there is not a single person in the world who can prove that is the case. I can prove what Apple stock was worth yesterday and what it's priced at today. What its price was yesterday, what its price is today. I can tell you exactly what Apple's stock was worth a year ago, 5 years ago, 10 years ago, or even all the way back when Microsoft had to spend money to support the Apple stock. One of the most ingenious investments ever made, by the way. It's never talked about. You know, the Bill Gates decision, it is never talked about how genius that decision. Microsoft allowed Apple to survive. Now, you can prove all of those stock prices have changed. You can't prove any house anywhere has changed in 30 days. If you can, there's a $10,000 reward sitting here. If you hear some economist, some realtor, some blogger, some chief economist, some real estate talking head, you hear a politician commenting about, we're looking at the house price claims on this decision in Vancouver today, where they're making a commentary where they're trying to attach a lack of housing stock growth with rising house prices, and they cite the benchmark price. That's just simply a case of an economist who is making this argument, not understanding what the benchmark price measures. This economist can get $10,000 by simply proving housing prices change in 30 days. Because this is what you listeners, I hope, understand. If house prices don't change ever in 30 days, how do they change in a year? How do they change in 6 months? How did you get the local real estate board claiming house prices went up 30 and 40% year over year? How did it happen when none of the people who made those claims can prove house prices change in 30 days? I mean, housing prices had to increase almost 3% some months if you're going to get a 30 to 40% year over year gain. Yet they can't prove it. They can't prove it over 60 days. They can't prove it over 90 days. We can give them 90 days right now to prove house prices change. They can't prove it. So this listener was right. There's a $10,000 reward out there right now for anyone who can prove house prices change in 30 days. We will publish any response we get. We have always said that. We will publish. As a matter of fact, I will have the staff create a web page that it will even make available to the public. So it no longer has to be an insider op. Okay? It can be to everybody. We don't care because we know we won't have to pay it because you can't show us any place in North America from 1978 till today where you can prove the price of a house changes in 30 days. You can't prove it. If you want proof, go to your stockbroker and ask him how he proves the price of Apple stock changes in a day. He can prove it. No one can prove house prices change in 30 days. And I will leave it with this, Jim. Canadians' wealth is held at home. The vast majority of this country's wealth, the citizens' wealth, is home equity. It is 3 times, earlier this year, it was over 4 times when the stock market crashed. Home ownership wealth was over 4 times the value of the wealth held in the Canadian stock market. Okay, was 4 times as big, home equity wealth, yet nobody can prove house prices change in 30 days. If you can, there's $10,000 here waiting for you to collect.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener heard about a new shared equity program in Toronto being promoted by a past Toronto Real Estate Board president who enlisted some high-profile housing market analysts to promote it. The listener asked, is this a good opportunity or not?
The old shared equity scam. Okay, so this, as I've said to your listeners before on the show, I learned a lot of things from my parents. And my dad gave me a few warnings when I first started in the business, things to watch out for. Scams is what he called it. What you're referring to, Jim, is a Ponzi scheme. It's a Ponzi scheme that most people don't understand how the scheme works. So it's actually promoted by people as being legitimate. And when you see commentary coming on these shared equity creations, you hear the genuine belief in those speaking up for this scheme that they think it's a good thing. Like, they genuinely believe it's a good thing. They're not evil people. They genuinely believe it's a good thing. Now, I will say that the people who institute the scheme know fully well what it is. The one you're talking about in the former Toronto Real Estate Board president, that is a realtor who's been in the business since the early 1990s. This particular person has been all over the real estate market, like so many of them. He bumped from one company to lead another company, to lead another company, to the president of the real estate board, now to this shared equity Ponzi scheme. You notice I can say it's a shared equity Ponzi scheme without fear of hurting it, or without fear of me facing charges for defamation, because I can prove it's a Ponzi scheme. And here's how it works. There's this company, which is led by a recent former president of the Toronto Real Estate Board, is offering what's called a key holder program, where you can put a $1,000 down deposit, and when a key becomes available, you can buy that key for $25,000. Some of the biggest names in housing analysts in Canada today, just last week, spoke for this company. Their faces are on the company website. Go to keyliving.com. You'll see what I'm talking about. Like a major brokerage franchising brand. Their chief economist was there. A housing analyst who's appeared all over the news is on there. And then a real estate consulting person who supposedly is from a company that is supposedly consulted from 1976, which I wasn't even aware of. So, I mean, I was ignorant to that myself. But these three people were all here shilling for this shared equity Ponzi scheme without even understanding what they're shilling for. They were lending their names to the credibility of this scheme. Here's how the scheme works. You tell some innocent young home buyer, you can buy a share in the property because you don't have enough money to put down. You can purchase one share, which will give you exclusive access to a rental unit in the building. We currently have 100 available. You can give us $25,000 and you will own one share in the building. That's pretty good. I don't have the money to put a full down payment for what that condo that I'm renting is worth. You agree to a lease term in that building. Let's just say we give you a 5-year lease term, and we have on that lease term built in standard 3% yearly increase, just a little bit above inflation. Hey, but don't worry, you're part of this. You're going to get profits from this building. Remember, you're going to get profit. You give them your $25,000, first your 1,000, then your 25, or maybe 24, so it matches 25. And you have the little tiny share in the corporation. They do this with 100 people. These people all sign lease agreements. The first lease the lease price that you have to pay for the unit on the day you move in is slightly higher than a comparable unit would rent for in the same location. It's, another $200 to $300 a month, which is about 10 to 15% more than you could go out negotiating on your own. But don't worry, you're one of the owners. You hold a key. You have a $25,000 investment in this building. Okay, so now you start at 15% more. You have a lease agreement where you're going to have 3% increase over the next 5 years. So now you have let's say it's only a 10% premium on day one when you move in. Well, that 10% premium is multiplied by 3% for 103. You go to 103% of what you paid. So that extra you paid increases each year in the next 5 years. You've already signed an agreement. Hey, but it's okay. You own a share of the building. What the people who created the scheme do, they collect 100 times 25,000, $2.5 million. That allows them to secure the building. They also have you renting the building at a premium rent, and you willingly pay rental increases each year beyond what is needed, what legislation dictates. You're going to pay 3% more a year instead of 2%. Oh, no big deal. Sounds good enough. 5 years from now, guess what happens? They refinance the building because now the building has rent that are about 25% higher than what they were 5 years earlier. Since it's a commercial building, the loans that are acquirable on the property are based solely on the rent taken in. They not only can pay you a minimal stipend, maybe an 8% return on your 25% down, but they walk away with $2.5 million in cash on the refinance. That what they have done is they have artificially inflated the price of the building by having the rents go higher than what they normally would have went, even if they did it at just the going rate of rent. And even if they had got you in at market rent, true market rent, which they don't, they still can operate this scheme. This is a scheme that has been out there for 30 years. My dad warned me about stuff like this. So here we have a former president of Toronto Real Estate Board out there shilling a scheme, which he gets 3 of the top voices in real estate recommending, effectively endorsing by appearing on that company's website. The innocent young buyer sees, oh, look who the 3 people here that are talking. Obviously this is good or they wouldn't be talking about it. No, they are obviously clueless to how the Ponzi scheme works. I can run these Ponzi schemes, Jim, coast to coast in every major city in this country, and no one would even know what's going on. I can run this Ponzi scheme with CMHC backstopping, ensuring the scheme itself. That's how easy this scheme is to run. Think about it, folks. If someone asks you to give them $25,000 to be a key holder and then a share owner on a building you yourself is going to rent, something is wrong. It's impossible. The math doesn't add up. Someone clearly is able to extract a huge profit out of this. There's staff at this. There's staff in this picture. So your listeners, there's a website called REM Online. REM Online, and it's where your local real estate brokers go and talk. It's the one newspaper for real estate brokers across the country. It's the only one that there is. It's been the only one that's been there for 30 years. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. They have a staff of 12 people running this scheme. They have a CFO, a CEO, chief of finance, a CMO, it's some of the names that I see here are names that I've seen on and off for a long time. They're all people who have failed at the sales business. They were total failures as real estate salespersons. They're not like an Owen Bigland out in Vancouver who actually sells houses. He is a salesman. He is, there's nothing wrong with Owen's videos because Owen is not pretending he's not selling. He is a salesman, true and true. Nothing wrong with it. I disagree with his analysis of housing markets, but at least he doesn't pretend to be something he's not. And the guy is successful enough that he can continue to do that. He doesn't need to run a scheme like these guys do, who are all failed realtors. Because if you've been in the business 30 years and you're still working, it's because you didn't make enough money as a salesperson to be able to retire. It is a Ponzi scheme, Jim. I've just explained it. It's very easy to explain. Anyone with a calculator and a basic understanding of how a rental building operates and is valued and is leveraged and is refinanced will agree with what I'm saying. If they don't, then maybe they'll appear and shill for this company, not understanding their own reputation is being used to hurt innocent young home buyers who are conned into giving away $25,000 of their money to make the people smiling at them rich.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, a home buyer, asked how someone who purchased a home in February and now find themselves preparing to close on a home worth less than the price they bought it for can seek relief from the loss.
Well, I feel sorry for people in this situation. I feel sorry for people that were misled into believing that the housing market was ramping up in February. I feel sorry for people who went ahead and spent 5, 10, 15, 18, 20% over asking price in the month of February in some parts of the country because they believed what the real estate brokers were telling them. I feel really bad for those people. And I would say this is a singular opportunity that has never before been possible, where you can seek relief from the real estate broker who sold you the property. Now, what your listeners should do is go to, I think it's just Google Bob Aaron, Aaron, and he's a Toronto lawyer. Bob has been a real estate lawyer for, it's got to be over 30 years, Jim. I mean, when I was a young guy, Bob Aaron was giving legal consult to the real estate industry. This guy's appeared in the Toronto Star on and off for, I think a couple decades. The guy has never sold out, okay? It was a guy who the real estate boards could never get to sell their message. This guy is a pro lawyer. This guy knows what he's talking about. This is a guy who calls a spade for the sake of the common term. What Bob does, the Ontario Real Estate Association, as did the British Columbia Real Estate Association, as did the Alberta Real Estate Association, as did every real estate association across provincial real estate association across Canada, came up with a whole set of clauses called the COVID clause. Clauses that their members could use to insert into an offer to make sure the deal closed. Listen to what I just said, folks. The clauses were designed for the sole purpose of the realtors getting their commission. They were never designed to protect you. Well, I guess Bob heard about these clauses, and he wrote a story about it, as did another big high-profile lawyer in Toronto, telling people you shouldn't use the clauses. The clauses were dangerous. The clauses put you at risk. The clauses had never been tested in a court of law. The clauses were ill-constructed. These guys came out publicly and said that. Yet on the Ontario Real Estate Association website, they're telling all the realtors in Ontario to use these clauses. When the Lawyers Society says, whoa, you can't do this. These clauses are terrible. They're dangerous. Because they are. Because the Ontario Real Estate Association only wants to be sure their members get paid. That is their legal responsibility. They have no responsibility to helping the public. Zero. The British Columbia Real Estate Association has zero interest in helping the public. They can pretend that they do, but there is no legal responsibility to do so. Their sole legal responsibility is to protect their members. So, because the real estate organizations foolishly came out with these clauses, this is going to give home buyers who purchased a home anytime this year an opportunity to go after their real estate broker and, I would argue, even the trade association, because they have come out with false clauses that they claim to be protecting the homeowner, which have now been debunked as only protecting the commission. Now that you see that, you have a reliable source of evidence to take with you in a court of law that you have been lied to by organized real estate. Then you go back in and you argue about the house price. The reason why you offered that price in February, because the Toronto Real Estate Board told you housing prices, or the Vancouver Real Estate Board, told you that house prices had gone up. The housing market was getting hotter. You believed them. You believed the broker. So what would a normal, responsible person do who believed their broker, believed their trade association, believed the local provincial regulator, or provincial association? They believed all those people. They believed everything they read in the paper. Of course they would do that, because they believed they had to do that in order to buy a home in a supposedly accelerating market. Guess what, folks? The data shows otherwise. You didn't need to do that. You were caught at the turn. You bought at peak. Actually, a double peak. Whipped cream topping peak. That's what happened to you. So I would say that you have an out now that you have never had before. I would suggest that you Google Bob Aaron or you go to the Toronto Star and do a search on Bob Aaron, see his recent article, and you will see that his open criticism of the clauses that have been put in place by organized real estate from coast to coast. They are not consumer responsible clauses. They are clauses that are designed for one purpose and one purpose only, to secure commissions. It is the most unethical thing that I have seen come from organized real estate since the benchmark price was released. The double counting, the quadruple counting of single sales, I can understand that Greg Klump was clueless to how MLS systems report data. Benchmark price, no. The stated goal of that was to hide commission gain. And these clauses are simply designed to protect their commission.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.